Many people don't want to learn trading and investing because they made very bad experiences in the past or they heard from some people. But the problem is always they're not educated. If I see people losing money in the markets, it's because they don't have a strategy. So one thing that many people talk about is ETFs. ETFs basically means it's spread out, diversified investment portfolios with a lot of stocks, for example, tech stocks, and then you have Tesla, you have all the car stocks, you have all the AI stocks, all of these kind of things, and they're all pulled together into one investment fund, kind of, right? And then you invest into it so you're more diversified. And I think ETFs are amazing, but the thing is with an ETF, you will not become wealthy in a short amount of time. And our goal obviously is to have a logical expectation in the markets, right? So I'm not someone that talks about you have to become rich tomorrow, right? Or in 2 weeks, no. But I'm also not someone that says you need to do this for 50 years and put money aside every month and invest every month $100. And that's not my goal, right? My goal is to become as rich and wealthy as fast as possible by minimizing the time frame, but having a good time frame, not an over-exaggerated one as most people use it to market out there, where they say in 2 years they became multimillionaires with trading or investing, which most of the times is just BS, right? So I think rich and wealthy by saving money in ETFs is something that if you don't do anything in investing and trading and you just want to put money on the ETF and just let it run and have your 5 to 10% a year, that is good, right? Do that. But if you really want to make it and you want to make as much money as possible and play the game of the highest odds, then an ETF will not help you. An ETF is then used once you have hundreds of thousands and millions and you want to diversify risk. So for example, now I have a lot of money, and besides the money that I'm using in the crypto markets and the stock markets and the meme coin markets, look, just to give you an understanding, I have 60,000 US dollars at this point right now in the meme coin market invested, 60K. That's about 1 to 2% of my whole portfolio in crypto only, right? So that is crazy if you know the numbers and you make the numbers, right? But what I'm trying to say here is I don't invest into ETFs. I will start to invest into ETFs and hedge funds and give it to private offices. Once it's millions and millions and millions, right? You put $1 million on the ETF, you make your 10%, which is 100K a year, perfect, you can pay your rent. But we need to decide. It depends on if you want to go down the route of, hey, I don't want to learn trading investing, I just want to put my money somewhere, then yes, use an ETF, it's very easy, you can set it up online. But if you want to maximize your results, then an ETF in the beginning will not help you, because we try to play as risky as possible, but also as safe as possible, which is a little bit paradox, but we'll talk about that. I once listened to an interview of Germany's largest hedge fund manager, and he said something that blew my mind, and it's gonna blow your mind. He said, poor people use very little money and invested very risky to make money. And rich people and wealthy people, they use a lot of money and invested and traded with a little risk, and they still make a lot of money. So our goal in trading and investing will forever be to increase the capital that we put in the markets, because the more money we have in the markets, the lesser of a risk we can play, right? Because if I use $1,000 and I'm trying to get it to $100,000, I will need to obviously have a very, very high risk. But if I have $1 million and I put this $1 million on a hedge fund and I make 10% a year, then I'm also making 100,000 easily, right? So our goal is always to increase our capital through, let's say, an online cash flow business or any other ways. Trading and investing is not only about your skill on how to trade and invest. It's also actually based on your skill on how can you pull money in. You need cash flow, you need more money. The more money you have, the easier it will be to make results in the trading space and in the investing space, because you can use more money, but you can invest it with less risk. Whether if you don't have money, you have to be very risky. So I obviously started to invest very risky with the money that I could afford to lose into the crypto markets especially. In the crypto space, my story is actually pretty easy. Before the bull run in 2020, the C19 bull run basically, right, how we call it, I had $15,000 saved up. I invested it into crypto, into ETH and BTC, sold it very much at the top at like $59,000, $60,000. Right out of the 15, I made $80,000. Out of the $80,000, now I have a portfolio that is close to $1 million US, right, at this point. So yes, you need to start somewhere. And obviously that was not just like investing and holding, it was trading in between. But I started somewhere too. I started with a couple of $100 and I used these couple of $100 in a more riskier market. And then now I'm also buying a lot of gold, silver, watches, things that are just like a little bit less risk off, right? Because once you have the money, you can go less risk to still make a lot of money on that, okay? So I think it's important to minimize your risk in the positions, but to maximize it in the market itself, right? Because you just know that if you have little money and you put that money into an ETF, nothing is going to happen. But if you take $1,000 and you know how to more or less trade and invest, because beforehand you invested into good education, now you can maybe use the meme coin space or the crypto space to double, triple, or quadruple that money. And now out of $1,000, you made $4,000 or $5,000. Now you can use that in the next cycle or other investments, right? You just get more shots, because you have to see it like a gun with bullets, right? If you have a gun and you load it with one bullet and you shoot it, you miss, then you miss it. But if you load your gun with, say, let's say 10 rounds, you have 10 times the chance of hitting the target. Now you have 10 bullets. You put one into the ETF market. Okay. You put the other one into meme coin, 1,000. You put another 1,000 into crypto. You put another 1,000 into gold and silver. You put another 1,000 into the Forex markets and you trade. You see, you can diversify way more. Whether, for example, let's say your meme coin portfolio goes to zero, your crypto portfolio goes to zero, your ETF is still making you 10%, your Forex is making you 5%. The other investment in stocks that you do with $1,000 now is up for, let's say, 20, 30% in Tesla, for example, or Coinbase that just did that a couple of days ago. In a very small time frame, stocks are insanely profitable nowadays. Perfect. You now made $200, $300 just on stocks. Whether you lost on the other positions, the other one is going to make it back. So in trading, it's completely normal to have positions that you lose, but other positions will make that back and profit. How can I calculate risk? Is once you enter a trade, you need to diversify the amount of money that you have. So as we just did the example, if you have $1,000, you divide it, for example, by 10 times, that would mean now you have $100 each. Or if you have $10,000, you divide it by 10, now you have $1,000 each. So I would go as much as possible at, let's say, 1 to 3% risk. So if you have $1,000, 1 to 3% would unfortunately be $30, right? If that is possible. If you have 10,000, right? $300, $400, and then you can go lower on the risk, which is at the end of the day really smart if you do that. But it really depends on the beginning of the money, right? But I would always say is try to have as many bullets as possible. So calculate your risk, and you should never in any market, even in the highest risk markets, you should never lose more than 10% of your account. Because if you lose more than 10% of your account, let's say you lose 50%, now you only have 2 shots. You should at least do 10%, right? So that means you have 10 shots, like 9 you could miss and 1 you hit, and it can make you all the profit back. So in trading, investing, it's not so much about, at the end of the day, hitting every trade. It's about the trades that go into profit need to make you double, triple, or even more than that. Whether the positions that go to zero, you lost the initial, right? So you lose $100 if you put $100, but some positions are gonna make $400 or $500 out of it. Now you made back 4 or 5 losses, you know what I mean? So that's how you calculate the risk. How do I know if I'm gambling or if I'm using calculated risk? Now, to understand if you're actually knowing what you're doing and gambling, there's a very easy question you can ask yourself. Could I do it again in a different market? Do I know the exact steps to get the same result again? And if not, then you're just gambling. In trading and investing, it's not about making money and it's not about being right. It's about you knowing what you're doing and feeling good when you enter the position, and you having the ability and the skill set to replicate it and do it again in any market because you know how you did it. And if not, you are gambling, and you should be very careful, because gambling always means you are losing and the bank always wins.